Hello, Valley of the Sun. Thank you for joining me, Nathan Claiborne, your host of the Phoenix Real Estate Roundup. Today is Thursday, May the 4th. That's right. May the 4th be with you always. Active listings today on our regional MLS, 12,171. I want to remind everybody that at the beginning of this year, that number was 16,500. So essentially, there are 25% fewer homes for sale on the market today than there were at the beginning of this year. 25% fewer. And that really accounts for the headlines that you're starting to see, that home prices are indeed something that I've been talking about, but they are indeed going back up. They are measurably and noticeably going back up in price. So those of you who are waiting for the home market to crash, stop doing that. Stop doing that right now. Good news today too. So normally I put these videos out on Wednesday, but yesterday was the Fed funds announcement of what they were going to do. Most of everybody who pays attention to this stuff expected a 25% increase, and that's exactly what the Fed did. They're still towing a tricky line, looking at strong economic numbers on the job side of the equation. We're starting to see prices ease up, so we're starting to see some progress in the pricing department, but labor is still a little hotter than I'm sure that they would like to see. So I think this is the last rate hike we're gonna see for a little while. But good news for you if you're shopping for a house, because mortgage rates immediately went down. Not a ton, but measurably. They're at 6.49% is the average 30-year fixed rate mortgage today, which, I mean, it's higher than we love, but it's still manageable. And again, there's lots of buyer demand in this market. I can't say that more. I can't emphasize that more than I already am. This market is hot. But one of the things that's interesting about the Fed interest rate hike and the other economic data surrounding it, rental prices across the country and here in the Valley as well are starting to cool off. And that is a huge inflationary driver. In fact, it's probably the biggest ticket inflationary driver that has been the case, right? Rents have gone up huge in the last 2.5 years. And they are finally showing signs of easing, not necessarily going down, but at least not hammering renters any more than they've been hammered for the last few years. So good signs, I think, in all parts of the economy. Even though the Fed had to raise it another 0.25%, I think we're on the right track. And that's your real estate roundup for this week, Thursday. May the 4th be with you.